Hello, my name is Alwin Ng and welcome to Market Apprentice. Today we'll be talking about time frame correlation. Basically, the idea is to understand how we can use time frame differences to maximize our trading. Hope you enjoy the session. Objective. Let's reiterate. The objective of time frame correlation is to learn the move of price when moving from a big time frame to a small time frame, as well as when you move from a small time frame to a big time frame. We want to understand price. By that, I mean that we want to identify the journey or direction of price so that we can use that to plan the next move. We also use time frame correlation to find efficient entries, basically low risk and high reward entries. Let's start with a small to big time frame. In front of you is the direction or movement of price which happened to look like a random movement. As you can see, it started off as a whiff trend, small little pullbacks, but on the whole, it's just going up and down. However, if you take a step back and look at a bigger time frame, in front of you is a 60-minute chart, where you realize, actually, the movement isn't that random anymore. Essentially, price is cycling in a healthy price cycle. In fact, what you will see is a pivot high or swing high, swing low, swing high again, and you'll be expecting another swing low somewhere here. Now, if you take another step back and look at a daily chart, this seems even less random. Price is in fact moving in one main direction, which is up. This is what we call a cyclicity within cyclicity. Price is cycling within each time frame. And now, looking at a bigger picture, price isn't random anymore. In fact, there is a clear direction. This is the beauty of time frame correlation. Next, let's move from a big time frame to a small time frame, but looking at it from a different perspective. Here, we're starting off from a big time frame. The daily chart is showing an uptrend. And now we go into a smaller time frame. As you can see, the smaller time frame shows that price is giving a healthy cycle within the bigger time frame. So price is moving up and down and up here. Essentially, we have a whiff trend phase and a pullback phase. As mentioned earlier, in price cyclicity, we always look to trade the bounce. In this example, we're looking at the end of the pullback phase and to go long at the start of the whiff trend phase. Here, we're potentially looking for another entry as soon as the pullback phase ends, looking to go long when we have a new whiff trend phase. Now that we have a clearer direction, we can go even smaller. As you can see on the 15-minute chart, price is cycling within the 60-minute chart. This is a sign of a healthy cycle. However, we already know that our major trend is to go long. Looking for efficient entries is so much easier as long as you remember to always trade with trend. Right, let's do an exercise. In front of you is a Euro-Yen on a 60-minute chart. What do you see? If you need to, please pause this video and continue the video as soon as you're ready. Now, using a 60-minute chart, we take a step back and look at a bigger picture. Essentially, this is potentially what is showing on the weekly chart, a bigger trend direction. Here, we have the swing low, swing high, swing low again. Now, we could switch our mind and potentially even look at a daily. Here, while the chart is actually a 60-minute chart, by taking a slightly small step back, you can see the price is cycling in a different pattern. Here, we have a swing high, swing low, swing high, low, high, low, high, low, and potentially another high. Do you realize, by taking a step back between a mid step and a big step, the picture seems not so random anymore. In fact, we have a clearer direction of where price is moving on the longer term. Now, can you see the beauty of time frame correlation? The ability to switch from a different time, the ability to step in and step out. This is all very useful in trading. Now, let's look at the function of time frame correlation in a little bit more detail. How do you use time frame correlation on your day-to-day trading? To start off, always start on a bigger picture. Use the weekly chart for direction and major support and resistance. You actually just want to ask, what is the market doing? In this example, we have a GBP Yen weekly. As you can see, there's a very strong uptrend. Here is potentially a horizontal support and resistance. This is probably around 133.5. As you can see, a very strong trend bar, which broke horizontal. This is a strong indication that price is very bullish. We use the daily for strategy and building a case. You want to ask, what pattern do I have? Now, the first thing you do is to identify the same horizontal support resistance. 133.5 should be around here. Again, there is a very strong trend bar here. Price broke level with conviction. It shows commitment that the bulls are back. Again, ask yourself, do I have a pattern to trade? Essentially, what you'll be looking for is a retest of this level to take a long here. The first pullback happened around this box. This is represented by the high test bar on the weekly chart. Now that we have a pattern, we go to the 4-hour chart. Here, that little box is represented by this consolidation area. I mean, this box is the same as this. If you're not sure, double check it with the price level. Ask yourself, does the price pattern fit my rules? Is there a trade? Let's look at another example. Here we have an Aussie CAD weekly chart. As you can see, I've already identified a weekly horizontal level around this area. As you can see, price bounced here once, twice, and 3 times. That gives me a valid horizontal support and resistance level. Price then moved up and moved down very aggressively to break that level. Now, I'm in a downtrend. As price pull back to retest that horizontal level, that gives me an idea that I'm going to take this short. This purple box here would be an ideal location to take a short. Now, moving to the daily chart, I can see that there is a pullback somewhere around here. Remembering that the major direction is short, I want to look for a short setup. I ask myself, do I have a pattern? Now I go to 4-hour chart for better efficient entry. Looking at how price tested the major level, I want to look for signs to go short and take a short when there's a pullback. As you can see, there's a swing low here, swing high, swing low, a swing high. Depending on my rules, I could take a short somewhere here, or even if I were to draw a trend line, the first 2 touches would confirm my trend line, and the 3rd touch would be where I take it short. Can you see how I've moved from a weekly chart to a daily chart and then to a 4-hour chart where I find my entry? Just to sum it up, always look for a bigger picture. By that I mean the monthly, weekly, or even daily charts. We use the bigger picture for directions and for major support and resistance levels. Then, we move to the smaller picture for efficient entries or minor support and resistance. For those advanced traders, use a smaller time frame to scalp. Here are some recommended time frames. When you're trading on a daily chart, you must always analyze the weekly chart to give you directions. When you're trading on the hourly chart, always use the 4-hour and the daily chart for directions. A complete picture is when you have a weekly, daily, and a 4-hour chart at the same time. Just to recap, your weekly charts are for directions. Your daily is where you build your case or strategy. And your 4-hourly is for efficient entries. That's it for today. Make sure to stay tuned, and if you haven't done so, do sign up for the advanced courses for more lessons on Timeframe Correlation. Also, remember to practice. Find as many charts as you can. Keep practicing because practice makes perfect. That's all now. Thank you very much and happy trading. Hope to see you soon.